Welcome to the Vital Dawn podcast for Friday, July 2nd. U.S. equity futures are trading flat to up small. So the Dow and S&P futures are essentially unchanged. The NASDAQ futures are up about 16 points. So that's about 10 basis points. So very minimal moves in U.S. equity futures. The same goes for European equities, where you have the major indices trading up about 15 to 30 basis points. So doing a tiny bit better than the U.S. They're seeing outperformance in Europe in areas like basic resources and tech, seeing underperformance in banks and energy. Turning to Asia, the price action was very mixed overnight. So you had relatively large declines in Hong Kong and mainland China. Hong Kong finished off 1.8% on the Hang Seng. The Shanghai Comp finished off about 2%. Japan, Australia, and India all ended higher. So no major profound headlines this morning to acknowledge. You have a bunch of kind of more minor updates on a variety of different topics. Just looking out for the calendar today, obviously the jobs report will be very much in focus. The print consensus is around 720,000. Whispers are not terribly different from that. You had some whispers maybe up around 800,000. I think people are a little bit burned by what happened in March, where you saw whispers get very aggressive. With 1 million plus figures getting thrown around, the figure and the absolute number came in below that. So I think people are relatively optimistic, but they're kind of keeping their expectations in check. So around 720 is the print consensus. And like I said, whispers are not terribly different from that. I've been writing a lot the last couple of days. I've been sending around a lot of pieces. I think, I'm tactically bullish on the outlook for cyclical stocks. I think you have two catalysts coming out that will have hawkish implications for monetary policy, including today's jobs report and then the Fed minutes coming up on Wednesday. That obviously should help cyclicals, especially after the massive underperformance last month. That should help cyclicals trade a little bit better than growth. I think anything of 500,000 or above will have hawkish implications for monetary policy, meaning that you're going to kind of keep the Fed on schedule to taper either at the end of this year or very early next year. I think you're going to probably have to see something below 400,000 to kind of get tech stocks trading very well today. And then it's probably not going to be until north of 1 million that it's kind of a net negative for the entire market today. So I talk a lot more about that in the piece. So be sure to check that out. But those are kind of my thoughts for jobs today. Just as far as major news, again, there's really not a whole lot to talk about. You do have some interesting updates. So you had a bunch of countries yesterday come out and reach an agreement, a tentative agreement on this whole international global minimum tax that the White House has been pushing forward with. This is still a very long way from coming to fruition. I sent around a big piece about it yesterday. So you have the G20 finance ministers meeting coming up next Friday and Saturday, the 9th and the 10th. The hope is that you could have some type of an agreement in place by the end of this year, but then you have to go back and have that agreement get passed by all the participating countries, including the U.S. Congress. I think it's very unlikely that you're going to see this get passed through Congress, but this is just one component. The other one being on the domestic front, that I think the month of July will have a lot of tax hike headline risk. I think markets, for the most part, are assigning very, very low odds to actual tax increases. So that does create a risk just given the expectation setup. But I also think it's relatively accurate in that, as I've been saying, I think the risk of large increases on the tax front is low, but investors should be prepared for a lot of headline risks throughout July, again, both on the international front and then on the domestic front as well. The CBO published an update yesterday just looking at the U.S. fiscal outlook. And I think the most interesting takeaway from it was just it kind of lays bare the very large fiscal cliff that's kind of sitting out there on the horizon, given the massive stimulus that was injected into the economy last year and early this year. So the fiscal deficits, are set to fall pretty meaningfully. So from around the mid-teens as a percent of GDP down to kind of mid-single digits. So that's a big chunk of stimulus that will go missing from the economy. Now, obviously, the economy will be on a lot stronger footing, so it won't need that much stimulus. But that's still a large source of support that will be removed from the economy. So that was out midday yesterday. Again, not terribly impactful in immediately on equities, but it's just something I think that fits into the narrative that investors should be aware of. Otherwise, again, not a whole lot really to mention on the macro front, really, or the micro front. You didn't have any major earnings reports out overnight. We're kind of in this relatively dead zone of news as as the quarter ends, and we're kind of a week and a half or so away from the start of Q2 earnings, which starts on the 13th. So, I suspect that you're going to see things relatively slow, especially today after the jobs report hits. You're likely to see attendance and liquidity thin out relatively quickly over the course of the session, with Monday being a holiday. And that is pretty much it for today. Just quickly looking into next week. Again, next week is relatively slow. It's the following week, the week of the 12th, where you start to see the calendar get busy. But you do have a few events on the calendar next week. The most important of which will be the FOMC minutes on Wednesday. Again, I have a more extensive preview that I've been sending around. It's on the website. I think it's going to have hawkish implications just regards to the outlook for monetary policy, and then you have Chinese inflation on Friday, the 9th. That will be watched very closely too. You have no real major earnings reports on the calendar next week. That's more, again, starting the week of the 12th. So that is everything for today, Friday, July 2nd. Thank you for listening.